there, folks, and welcome into today's video, which we talk about Alibaba stock. I've seen so many comments from folks over the past few weeks, let's put it that way, about me doing a breakdown of Alibaba stock. Is this a stock I'm interested in buying? I used to own this stock back in the day, did very well for us. I'm going to kind of give my 2 cents about this stock. We're going to talk about the stock price, which, let's be honest, what is the reason I'm doing this video here today? Because everybody has seen this stock price crash, okay? And so everybody's like, I know Jeremy likes some beaten down dog stocks. Is Alibaba one of those? So we'll talk about that, okay? We're going to talk about the financials of this company, some really good things this company has going for it, and some really bad things, okay? And then lastly, we're going to talk about the elephant in the room. The thing you got to understand about Alibaba is there's not one, there's not two, there's 3 elephants in the room when it comes to Alibaba stock, and you got to understand those, okay? And so today, I just want to look at the stock as objectively as possible and not give some biased opinion on this one, and just give you kind of the facts, in my opinion, on this, and if this is worth taking a risk in the stock and hopefully making a ton of money, or if it's not, in my 2 cents on that. So hope you guys enjoy this video here today. We're going to dive into this one. All I ask in return is that you smash that like button. That is literally it, guys. I hope you appreciate me doing this video for you here today. And by the way, we got a brand new course, How to Invest Like a Pro Within 24 Hours. If you want to check that out, check out the pinned comment down there. The pinned comment down there, guys. Appreciate you joining me as always, okay? So, Alibaba the Beast, okay? I mean, you know, we don't even have to talk about Tmall, Taobao, AliExpress, all their beast businesses, their cloud business, okay? I mean, Alibaba is a beast. This is the Amazon of China, essentially, okay? Now, their business models will operate a little differently than Amazon does, but at the end of the day, understand Alibaba is a beast, and it is likely just going to continue to become more and more of a beast over time. You can't say anything bad about their actual business model. Like, you just can't. Like, it's a beast. Like, when you look into this company and how many different divisions their company has and how many of those divisions are you know, reporting amazing growth, you can't say anything bad about the fundamentals of their actual business, okay? Now, the stock price is a complete different story, right? 1 month, the stock price is down 19%. 3 months, the stock price is down 24%. That's likely why I'm making this video, because the stock is being hammered and everybody like wants to know, is this a good stock to buy or is it not a good stock to buy, right? The stock, as far as the 52-week range, okay, $152 to $319, right? Today, as of recording this video, the stock is sitting at $162 a share, right? Keep in mind, the S&P 500 is near all-time highs, the Dow's near all-time highs, the Nasdaq's near all-time highs. Like, almost all the indexes are near all-time highs. You have big tech, also almost all near all-time highs, right? They're not all at all-time highs, but a lot of them are pretty darn close. And then you have Alibaba, which is a $400 billion plus beast, here at near 52-week lows, right? Like, pretty darn close, right? And so this is when you get into the situation when people are like, what is going on here? The company's a beast. It's amazing. They're not a one-trick pony. They have so many different businesses. They're expanding internationally. Like, what is going on? But the stock is just getting devastated, okay? There's 45 analysts that say buy the stock now. 45 of them, okay? There are 4 analysts that cover the stock that say just hold the stock, don't buy it, don't sell it, don't do anything, just hold it if you own it, okay? And there's one analyst that says sell the stock, okay? Now, when you see that, makes the stock even more alluring, right? I mean, it's like, okay, the fundamentals of the company's a beast, right? It's near 52-week low, while all other stocks have been doing amazing. And then you have 45 analysts that say buy this stock now, and only 1 analyst that say sell. Like, right here, like, you could sell most, you know, most folks out there that are looking for, like, okay, 45 analysts say buy, 1 says sell, I need to buy this stock, and it's near 52-week low. Oh, that's pretty darn intriguing, right? Now, the company has 1.18 billion annual active customers, as they call it, okay? 900 million plus are in China, which is a massive market that just continues to get bigger and bigger. I mean, geez, at the end of the day, maybe every single person in China is going to do some sort of shopping on one of Alibaba's properties over time, right? 265 million that are international. So the company has a big international base as well. It's just that when it comes to a company like Alibaba, China's so dang big that it just dwarfs the international numbers. But let's not confuse, like, that's still a massive number, okay? 265 million users internationally, right? Now, their latest quarterly numbers that didn't come out that long ago, okay? 34% 34% revenue growth this company reported, which is absolutely amazing. Adjusted EBITDA, however, was down 5%. That's not something usually you want to see. Adjusted EBITDA is many times investors' favorite number to look at if they're thinking anything in relation to like profitability of the business. They want to see adjusted EBITDA because that takes out a lot of one-time expense, that takes out all one-time expenses, non-recurring charges, things like that, okay? So adjusted EBITDA being down 5%, it's kind of like, okay. Especially when you have 34% revenue growth, like you would have thought that number would at least be positive. It's usually even better to see adjusted EBITDA up more than revenue, ideally. But obviously that's not the situation we have here with Baba, okay? Net income was also down 8%, okay? Usually you want to see net income growing faster than revenue. Obviously that didn't happen for Alibaba, especially when it's more of an established business, which Alibaba has been established for a long, long time now. It's not like this is some new company out there or something like that. So to see net income down, not ideal. Free cash flow was also down quite considerably, 43%, okay? Now, if you're looking for the negative numbers, there you go, as far as the negative numbers. Now, outside of that, I mean, it's going to be really, really hard to find any negative numbers for this company. I mean, everything else is pretty dang good. Those are three real big negatives that I saw in relation to their latest quarter, okay? Cloud. Now, back when I was investing in Alibaba, I would say my second biggest bullish point for this company after obviously the e-commerce opportunity was around their cloud business. I looked at what was happening with Amazon Web Services, and I said, I think Alibaba is going to be the Amazon Web Services of China and maybe potentially Asia in general, right? And this was going to be a huge cash flow machine. You saw that happen at Amazon. What we witnessed with Amazon was Amazon Web Services became a cash flow machine and a profitability machine for Amazon over the past several years. And I looked at Alibaba in their cloud business and it seemed like it was another AWS, just several years younger and with a huge Asia opportunity in general, right? And look at here, adjusted EBITDA was positive from negative for this company, which is another great thing to see, okay, in regards to that cloud business and becoming hopefully a profit machine for this company, all right? Now, the current P on this company is 19. Not expect, like a 19, you should expect that if it's some value stock that doesn't have much growth, right? This company just grew revenues 34%. Like the number's amazing, 34%. Like you would think this company has like maybe 4% revenue growth, not 34% revenue growth. That's crazy, okay? Forward P is 17. A forward P of 17 is disgustingly low for a company with 30+% revenue growth in the latest quarter. And keep in mind, Alibaba's supposed to keep growing for years to go in the future. And I have no doubts that that will happen, right? So the only concerning thing is that maybe it's somewhat close in terms of the current P and forward P, so it's not like they're expected to do some massive leap up in profitability. But at the end of the day, the stock looks like a deal steal up until we discuss the three elephants in the room, okay? If this was all that was going on with Alibaba, I'd be buying the stock hand over fist. I would be buying probably 2024 call options on this, which are likely coming out next week, okay? But there's the three elephants in the room, okay? The first elephant in the room is the US government. There's been a lot of talk about potentially delisting the Chinese stocks and just an overall very negative sentiment between the United States and China, okay? And this really started to take off under obviously the last president. He would come out and he would attack a lot of these Chinese companies, China in general, and this is where things started to brew from. And honestly, it seems like it hasn't gotten a lot better under the new administration either. There's still a lot of negative sentiment toward Chinese stocks. You're still hearing rumors about delisting of these companies, taking them off the exchanges, things like that, okay? That's the first elephant in the room. The second elephant in the room in regards to Chinese stocks in general, or especially big tech, is China doesn't like a lot of the big techs. Like when you see this, a lot of the commentary coming out of China in relation to the big techs, it almost sounds like they're not happy with a lot of them, including Alibaba, right? And we know there's been a lot of drama between Jack Ma and the Chinese government over time. Now keep in mind, Jack Ma is now removed from Alibaba pretty much completely, but he still owns a ton of the company. And on top of that, think about it like this, right? Think about it like this for a perspective, right? At the end of the day, who's the first person you think about if you think about Alibaba? That's Jack Ma. If you have any sort of mental image around Alibaba, it's still Jack Ma, right? And there's obviously negative sentiment there. And so you kind of almost have China kind of feeling like the enemy there. Then you can say, well, this happens sometimes with US companies where certain politicians will come out against big tech companies. Here's the difference, okay? A few politicians coming out against big tech companies, not a lot's going to happen, okay? In China, the government is really seen as one, and they will do whatever they really want to do. In the United States, there's all these protections and all these things where, like, you can't really come against us and things like that. Like, you know, it's almost impossible to imagine the United States just being like, we're taking over Amazon, or we're running Amazon now. Like, you can't even conceive that, because that would be the breakdown of the United States, the start of the downfall, right? Like, everybody would just go crazy, like, oh, whose business is next that the United States is going to take? In China, is it that crazy to imagine that? I don't think so, right? And so that's the second elephant in the room. The third elephant in the room is exponentially bigger than both of those two, okay? The third elephant in the room is the fact that if you buy Alibaba stock, you don't really own anything. You're buying a shell company in the Cayman Islands that has no real assets, no real anything. You're buying the hope that you think you might own Alibaba stock. It's a very different share structure than if you buy into an American corporation. Let's say you buy Apple stock. Talk to any securities lawyer, okay? Anybody, especially any highly advanced securities lawyer, which I'm fortunate I know a lot of them. And every single one of them will break down the immense difference in ownership share structure you have in owning a US company, like let's say Apple, versus owning a Chinese company like Alibaba. It's like night and day, okay? And the reason this is scary is when you hear the US and China being combative and the potential delisting of these stocks or something like that, you might think I'm guaranteed to get something, right? Not at all. Not at all are you guaranteed anything, okay? If all of a sudden Apple decided to do some crazy thing and delist or something like that, and you know, there's so many protections in place to make sure that doesn't happen. But even if it did happen, like, you have so much legal power to sue the crap out of so many people involved in that, it'd be ridiculous, right? Who are you suing if Alibaba decides to delist? Good luck. Good luck. You're going to sue the Chinese government? You're going to sue China? You're going to sue Alibaba? Good luck. That's all I'm going to say about that, okay? And that is the biggest elephant in the room. And so that's why I decided to, you know, take my money and run quite a while ago out of Alibaba, because I looked at it, and when I bought it, I was like, okay, I'll buy a certain amount of this. I can get past the share structure. But then when the US government started to get very, very negative on Chinese stocks, at the same time as, you know, China is kind of hating on a lot of these big techs as well, and you have that messy share structure situation where you're basically own some shell company that doesn't even have any assets when you buy this actual stock, that's where you get into some crazy things. And I hope everybody understands, like, I'm not just making this up. Like, literally hire any advanced securities lawyer out there, and they will all break it down to you on what you actually own when you buy Alibaba stock. And I would challenge, like, anybody that has 6 figures, 7 figures plus in the stock, hire a securities lawyer, okay, that you know, is very familiar with the law and very familiar with SEC regulations, those sorts of things, and they will break this down to you to a T. And you'll find, oh my gosh, it's actually really, really scary, okay? So if you can get past those elephants in the room, those 3 elephants in the room, then there's no question this is a great stock. There's no question this is a great stock until you go to the elephants in the room. And when you get to the elephants in the room, that's where things take a sharp turn, you know, for the worse. And so that's why I can't buy the stock. I love this, man. I love this. I love this. It's, you know, this company should be trading at 2x to 3x of valuation it's trading at. This stock should easily be at a 35 PE, a forward PE, if not a 45, 55. When you look at the growth this company has, like, there's no question this stock should be triple the price tomorrow. Until you view the elephants in the room, and that's where it's like, how can I own this thing, man? It's just, you know, it's a scary stock. So if you can get past that, I understand. If not, I understand as well. And so for me, it's not a buy for the elephants in the room, but you know, the business is a beast. You can't say anything bad about it as far as that goes. Valuation numbers wise, it's amazing. So hope you guys enjoyed this video. As always, all I ask in return is that you smash that like button, regardless if you're bullish or bearish on the stock. I like doing these breakdowns of stock like this. I hope you guys appreciate me doing a breakdown of stock like this, and not just giving you the good numbers and not addressing the elephants in the room, because if you're talking about this stock or any Chinese stock, you have to address those. You can't just like skip past that and be like, no, you have to talk about that, guys. So anyways, yeah, that's about it. Thank you for watching and have a great day.